You've entitled the presentation, Investment, How Your Investment is Killing the Industry. Let's revisit this talk and get an update on your thoughts.
Oh, it's changed tremendously. And remember, it was back in January of this year, and the market was different. Gold was much lower. Sentiment wasn't really there, although January is always a little more optimistic than the rest of the year usually. But it's changed. Like the theme was a lot of investors are just putting their money into the ETFs. They're not directly investing into the junior market. They're not participating in financings or anything that helps the advance those companies and create shareholder value. So that was the talk, and that was the main focus of the conversation back in January. Obviously, the theme has changed tremendously. Investors are now buying into the financings. We've seen a flurry of financings the last few months, especially with gold exploding pretty much above the $2,000 mark. We're trending a little lower today, but the investment sentiment has completely changed, and the attitude towards gold and junior mining is different as well. And that's sort of the theme that has changed over the last 6 months or 8 months now.
Why did you say that it was killing the industry, though? What was fundamentally wrong with the industry?
Well, the industry wasn't attracting too much attention. Like the attention was going elsewhere. It wasn't creating the value and returns investors were looking for. It's very easy to generate returns in the S&P or Dow Jones. You could easily make 25% a year and not have to worry. Gold junior mining is always an extremely high risk opportunity. Investing in broad-based ETFs was the simplest, lowest risk approach to gold investing or mining investing. Hence, the money went directly into those ETFs. But those ETFs only have to buy shares on the market, which helps those 70 companies or so that are listed in the GDX or GDXJ, but it doesn't help the other companies. And to keep in mind, there's like 1,400 companies that we're tracking alone at Oren Inc. In the mining space, raise capital, generate shareholder value, and generate news flow to generate that shareholder value.
Offline, you were giving me a very interesting stat. Between May and August, you said, within the junior mining space, the sector has attracted more capital inflows than all of last year put together. That's incredible. What caused this?
Well, obviously the gold price explosion, but in general, the return of the brokers and the bankers to the space. They're driving it. They're behind it. We've seen $2.6 billion raised since early May until now. And the main, obviously, is the gold price is attracting more generalist capital as well. Again, fortunately, the retail investors are back. It's not just us optimists here in the junior mining space that are active, that are investing their money, but also like, in that regard, like $2.6 billion. And keep in mind, we're looking only at companies below $1.5 billion in market cap and financings below $100 million. So there have been a few that actually were above that size. So there's even more money flowing into the sector. And it's great to see. And we, as I said before, like the brokers and bankers used to make their money in cannabis, esports, or other sectors. Now they're making their fees in mining again. They're raising money through bought deals. They're sure that they can place those shares. And that's what's driving the interest right now and driving those financings.
So you would say there's a direct correlation between interest in financing and the gold price?
Definitely. Like at $1,200 gold, nobody cared. Now you can see that Barrick and others are generating massive free cash flows. I've seen tables by CIBC and others obviously putting out free cash flow comparison charts. The percentages there of free cash flow to earnings actually is phenomenal. It's beating the broad sectors. The money is to be made. Buffett came back in the sector. Obviously, I have to say it. Can't ignore that fact. He's there because he can make money and he believes in the fundamentals. He's not there because he loves gold, but he likes to see free cash flow generated, and that's why he's in the sector.
What fascinates me about this story that you told is that the rise in gold prices this year is partly attributed to investors seeking a safe haven asset in light of COVID, the pandemic, and the recession. And so we've seen a rush into a safety asset like gold, but at the same time, like you mentioned, there's also a simultaneous rush into the junior mining space, which is inherently a very risky sector. So that's a very interesting paradigm you've got. You've got a rush to safety and a rush to risk at the exact same time, caused by the same thing. What do you think was going through investors' minds when they bought junior stocks that, again, are very risky investments by themselves?
Well, it's interesting because, as I said before, it was very easy to make money in the S&P and Dow Jones or in other sectors before that. But now investors are looking for some returns. It's only I think there's 5 stocks that's driving the S&P right now. It's the FANG stocks and I think Microsoft as well. Those 5 companies are driving the sector. If you look at the S&P without those stocks, it's actually down 3%. It's up 35% or something like that. It's like, I'm not a macroeconomist and I don't look at the broad indices too much, but it's important. Like investors are chasing returns. Now they're willing to go higher risk. They see the gold price driving companies free cash flows and valuations to more interesting levels. And of course, the safety net is still there. Although I do see last couple of weeks a bit more of a risk off approach. Companies or investors are slowing down just slightly in terms of buying shares in the open market and are pacing themselves a little more, maybe in light of the elections in November.
You think that COVID has destroyed or caused any damage at all to the fundamentals of the junior mining space in terms of operations, logistics, permanent damage that you can't recover from? Have you observed any of that?
No, I don't think so. The fortunate thing, or I don't know if there's any fortunate thing about COVID, but we've all been in the same boat. So investors have been very understanding when mines had to shut down and things were handled appropriately at the mines and production was slowed down. So investors were patient with the companies. They knew Q2 wasn't going to be the best quarter ever. But of course, gold price is making up for some of that. I've seen some companies use the COVID as an excuse to shut down mines that were due to shut down or were supposed to shut down anyway. But other than that, I don't think there's any permanent damage to that.
Yeah, if you actually look at the gold miners index, like let's say if you take the GDX, the gold miners ETF, for example, it's actually outperformed the S&P 500 by a significant margin. I'm just looking at the charts here, 41% up year to date as opposed to the S&P 500, which is only 7% up year to date. This outperformance, is it entirely attributable to the gold price?
I would say so, yes. Now, of course, what's happening, the US dollar showed some weakness before. It's gaining some strength back right now. It is the world reserve currency. So there is a bit of a, it's like it's coming back there. So we do see the gold stocks pulling back just a little bit now in light of the US elections. But other than that, that's gold price is mainly responsible.
Well, if the gold price is such an important factor, then I got to ask you, Kai, where do you see gold going?
Well, I'm an optimist, right? Like I like the current level. I'm not too displeased with $1,800 gold either, because the companies are producing free cash flow. What I do like is that the higher gold price is attracting the generalists, and it's attracting the money to the sector that we desperately need to generate news and drilling results and positive studies and results. That's important for the sector. So the higher the better, obviously. But I'm not going to say $5,000 or something. I'm happy with where we're at, and if we end the year at $1,900 gold, I don't think anybody can complain.
Yeah, tell us about the Oren Index and what it's showing in the most recent data points.
Yeah, no, Oren Index is a proprietary index that we put together here at Oren Inc., which, as I said, we track companies in the TSX, TSXV, and CSE, roughly 1,400 companies. Keep in mind, like I mentioned before, $1.5 billion market cap, $100 million financings. And it shows us that we've seen a healthy increase in the index number. That means we've seen more broker activity, seen more deals opened in the sector, and of course, more dollars raised. And as you said before, like May to August, we've raised $2.6 billion already. Last year was a little bit over $2.5 billion alone. So we're on pace to beat that by a wide margin. I'm curious to see if we're going to beat the 2016, 2017 numbers where we raised a little over $4.2 billion. So we'll see where we head there.
Okay, so last question for you. This is what everyone's wondering. How do I make money in this space? And what do I look for in order to follow the money? As an investor, in the junior mining space, it's very difficult to assess whether or not a company has a very good project. And so it's even more difficult to assess how the industry as a whole is performing health-wise. And so what should the indicators be that investors should be looking at?
That's a very good question, because as you said, it's not easy. Mining is like, if you read the mining press releases, it's mind-blowing. Like, how are you attract any interest from those press releases, just the titles alone? It's tough. Like, follow the later stage companies. It is very easy. Like, yes, you're killing the industry if you're investing just in ETFs. If you're just concerned about exposure, buy an ETF. You'll be happy. You'll make your money. But if you want a little more leverage, of course, buy the late stage developers, the early stage production companies. Look at the free cash flows for the first couple quarters. I think that's where the best leverage is these days. Soon to be producers, companies that are just financing to go into production or start construction. I think there's a lot of leverage there in the next few months, or in the next 12, 24 months, if that's probably the best risk-off, high-reward scenario I can think of in my head.
It is curious, isn't it, when investors kill the industry by buying index funds. It's kind of in my view, it's a self-fulfilling prophecy, because investors don't understand individual companies, and so they move slowly to indexation, and that in itself is going to kill, like you said, financing for individual companies. What can be done to reverse this? What can junior miners do to make it easier for investors to invest in their companies?
Well, as I said, like, technical disclosure is one thing, and just making it more approachable. Like mining is like, we're such a visual industry as well. Like we've got the big trucks and everything that we could show to make that more approachable for investors. Is not that easy, mining. Size is one thing. Maybe we need some more M&A activity. Like maybe we have too many companies. 1,400 companies is too many. Consolidation would certainly help, and then size matters as well. And you always invest in the bigger companies first before you go down and look into Grassroots Explorer that has a 10 million market cap.
Okay, so you are feeling good about the space right now, regardless of the industry potentially being killed by money going in the wrong direction.
No, I'm very positive. Like the current momentum, it's still there. Like regardless of the U.S. elections, Trump or Biden, it doesn't really matter. Maybe there's a bit of a slowdown in the next couple of months, but I'm very optimistic. Companies have raised money. They will be producing a lot of news flow over the next few months, and that should keep the industry going and investors interested.
Kai, great thoughts. I appreciate you coming on the show today and speaking with Kitco. Thank you.
David, appreciate it. Thank you.
David Lin reporting for Kitco News. Stay tuned for more coverage of the Minds of Money Online Connect Global.